Apparently, inflation is getting so bad it's affecting people's dating lives. Yes, that's right. And we're going to look at what's going on in China, and of course, Credit Suisse might be failing. Yeah, all of that and more. Let's begin. American energy bills are set to soar this winter. The global energy crisis may be finally coming to America. Why is this the case? Probably not what you're thinking. It's as if there's suddenly a shortage of gas in the United States. How can this be? No, much more happening here because, as you are probably aware, the European situation going on, they've got problems with their gas. Well, what happens? American companies, they come in and they're quote unquote lending a hand. With more American LNG flowing towards Europe, the United States may be facing increased electricity bills this winter. So all the supply has to now go to Europe because it's not coming in through Russia. And this presents a problem for Americans at home unable to pay their bills. The bills are going to go up. You have this, which is a positive piece of news that's out of Poland. Natural gas started flowing to Poland through the new Baltic pipeline from Norway via the Baltic Sea on the morning of October 1st. Promises made 6 years ago have been kept. This is a historic moment, and so on. We need to see more of this. We need to see positivity here, not just for Poland or Europe. We need to see this globally. We need to actually make progress. That has been nothing of the case for 2022, and even the past couple of years, we've really gone backwards in many ways, but this hopefully will be one of many. Looking here, you can see the inflation is hampering single Americans looking for love. Apparently, people are going on fewer dates with higher prices hitting budgets. Well, I just want to share some information real quick. You don't need money to be able to go on dates, okay? You need creativity. Maybe in today's day and age, things have changed, but I don't think that's the case, to be honest with you. If you look today, you need to get wise to the situation of what's happening. Yes, prices are up everywhere, but you have to find connections. This applies to your dating life, but it also applies out there with networking in business as well as friendships and alliances. Remember that, okay? It's not always about the money. Debt used to maintain standard of living. And this chart here from Real Investment Advice just shows us that over the course of the years and years, people are maintaining their standard of living. Yes, that's right. But they're doing so with debt. And that is always highly worrisome because for the average person, that debt has now become unaffordable because it is at a higher rate of interest. Then we have the big change. I spoke of this big change in the thumbnail, and you might be wondering, what's this big change? Here we go. China tightens lending taps, leaving African markets vulnerable. Slowing growth is forcing Beijing to scale back investment. African countries face debt distress as borrowing costs soar. This is something that I wanted to highlight because it's new when you think about it. China was the one that was going in the opposite direction through the rest of the world. They were opening up the taps. They were doing more than any other country, it seemed. And now they're changing that, at least when it comes to other countries. Developing countries in Africa are losing a champion that for years allowed them to borrow at cheaper rates than they would find in capital markets. China, Africa's largest bilateral creditor, has been scaling back lending in the region amid its worsening growth woes. That comes at a time of rising interest rates globally and shrinking liquidity. Factors have already sent bonds in the riskiest African borrowers, such as Ghana and Zambia, crashing, and their currencies, including South Africa's rand, to near lows. This just shows us that what we've had here has been quite turbulent and volatile, to say the least. I believe I have some charts on that actually to show you, but this cannot be turned around in an instant. We need to see increased interest rates to slow down inflation. Will that even happen on time? Will that happen before there is destruction and chaos in the financial markets? That remains to be seen. But I just wanted to highlight this because I've been covering China all throughout, and this remains something I would consider very unique, to say the least. Here we have Credit Suisse. Okay, all right. Well, apparently the CEO says, we have a strong capital base and liquidity. Immediately, you have to start thinking to yourself, They probably don't have either of those things. Okay, when the CEO has to come out and put out a fire, you know there's a real problem underneath. Quote, I know, this is a memo that he sent out. I know it's not easy to remain focused amid the many stories you read in the media, in particular given the many factual inaccurate statements being made. That said, I trust that you are not confusing our day-to-day stock price performance with the strong capital base and liquidity position of the bank. I would like to just highlight once again that yes, the stock is going down just like Deutsche Bank is going down, but you don't have to worry because the company has a lot of liquidity. You may have heard that before with Lehman Brothers as well as a whole bunch of other companies that eventually went bankrupt, but in this case here for Credit Suisse, they're saying the same thing. Doesn't mean that they're going to fail, but it looks terrible for their situation because they got involved with Archegos, because they got involved with all these other things, and they're just failing a whole bunch of bad decisions, to say the least. Here we go. Raging market sell-off in 5 charts, 36 trillion and counting. S&P 500 posts rare third straight quarterly loss as Fed hikes rates. You know what they're doing. You've seen it yourself. Well, I just wanted to show you a little bit from this because it has been truly incredible to see this. Look, global bonds and stocks see the biggest ever, I'm going to say that again, biggest ever loss in market value. And of course, that's dollar terms, maybe not percentage terms, but you see going back 2000 up until the present, and it has been quite excessive, to say the least. You can see that chart much more than what we saw in 2020. You know how rapid things declined in 2020, how severe that was. We've already gone beyond that today. So where will we be in a few months? Who knows, right? Missing savior. Fed's balance sheet and target rate won't save the day this time around. Just showing us here that when we have tightening, we have run into a crisis. Every single time they tighten, there's a crisis that follows. But people want to ignore that. They say, oh, that's not true. There's no correlation there, blah, blah, blah. Okay. Stress everywhere. Volatility measures have risen in all major asset classes. So you look here at the VIX index, that's stocks. You look at the MOVE index, bonds. You look at the Euro USD, and that has gone wild as well. So many people should be paying close attention to all of this. And you know, you could see where do you put your money, and this is just one chart that I'll leave here for you, but I'm going to cover that. I'm going to talk about that. In fact, that we should be keeping an eye on our portfolio and not simply relying on, hey, maybe things will turn up anytime soon. This is the kind of thing that people should be, and I mean should be, paying close attention to, because your livelihood is at stake. And that's why some people today have gone to cash. Cash retakes its crown as the Fed wrestles with inflation. Investors are piling into products that shield them from losses in a rising rate environment. For too long, people had been used to putting their money into just about any stock, and it went up. You had people like Dave Portnoy, who suddenly became a stock trader because all of the sports gambling was put away. And he would say, literally, stocks only go up, invest in anything. He was taking pieces of Scrabble and choosing tickers based on that. And guess what? A lot of the time, the stocks were going up. I mean, that's how garbage this became. But now we're in a different environment today. And so you can't just do what you did before. You can't just pick Scrabble pieces and find winners. It just doesn't really happen like that. So what are we talking about here? Well, there are different things that people have been getting into. Cash and cash equivalents, which is basically like short-term debt, right? A lot of people are buying short-term debt. Why? As it says in the second paragraph, rates on 3-month treasury bills are hovering near 3.3%. 6-month bills are 3.9%. Now, obviously, that's lower than inflation. However, 3.9% is better than the potential for losing money in the stock market or somewhere else, or just keeping it in raw cash. So this is what a lot of investors are doing. I'm not telling you to do that. You do what you think, but I'm just telling you that suddenly rates are rising, and that's offering an opportunity for investors to come and hopefully not lose as much money. If you only lost, let's just say only, I'm putting that only, lost a few percent, you'd be doing a lot better than the vast majority that are losing 20+% at this time. Most turbulent bond markets since 2009 braces for fresh jobs jolt. Why is that the case? When you increase interest rates, you crush people. And how does that happen? What are you talking about? I can put my money in the bank and get a higher rate of return. Absolutely. But what does it do? You have higher rates of interest, and that results in companies basically unable to grow and expand as much because they use debt. So they say, no, can't hire those people. Sorry, those people we just hired, you're now gone. And all of the worst performers in the company, you are now gone. That's the way it works. Money and credit tightens. And as a result, you constrict the flow of capital through. And that means, unfortunately, job losses. It could be to a greater degree if there's much more worry, but usually the case is you increase interest rates, job layoffs follow. And in fact, the Federal Reserve is intentionally trying to create this. They are trying to create a recession. Very important. And this was from Real Investment Advice, Navigating the Recession. There's a lot in here if you want to check it out for yourself. I like their articles, very well balanced. And at the end, oftentimes they like to just give you some pointers. This is what they're saying. I'm not telling you to do this, but I wanted to share it with you. Raise cash levels in portfolios. Reduce equity risk, particularly in high beta growth areas. Basically saying the risky stuff, get your money out of there. Add or increase the duration in bond allocations, which tend to offset risk during quantitative tightening cycles. Reduce exposure to commodities and inflation plays as economic growth slows. So this is an interesting one, and this is what's been happening, okay? Commodities, and they've been talking about this all along, by the way. This is not new for them, but I think it's important. I think it's important to address this right now, because for some people, they're going to look at it and say, well, what do I do? Well, let's talk about that right now. Well, the truth is that for so many, life has changed. What do we do? What's happening? Right here, let's talk about it. Inflation rising is making many aspects of life unaffordable. Maybe your dating life, or maybe it's simply trying to fill up the tank of gas in your vehicle. Those who did not listen to the warnings may be down in their portfolio by enough to damage them, okay? If some people invested in the wrong things, they might be down 30, 40, 50% if they went all in. And so that hurts a lot of people, okay? They think, should I sell now? I don't know. Maybe I'll just hold on. Maybe it never comes back up to where it was. Have essential preparations because shortages of food and energy could become a prominent and widespread issue. If you're not preparing, you are really taking a big risk, because this could be for environmental factors. This could be for something that's happening in the financial markets. Whatever the case may be, you've got to be prepared. So key, so important. Do not discount this, okay? Take the time to learn skills that could help you be more prepared or earn income in times of difficulty. And this is all what you must be paying attention to now. These are just a couple tips. I like to bring that out simply because for a lot of people, they weren't told this. I wasn't told this when I was a kid, okay? I didn't learn this when I was younger, and I wish I did. I didn't have somebody to do that for me. So now I'm learning on a daily basis, and I bring that information to you. This is part of the pillars of the Money GPS. This is essentially what we're talking about with preparedness and self-sufficiency. Okay, but we also need to look at the other pillar, which is all about having a high income skill or having a scalable business that you can run. These things together will help you maintain a strong foundation and a strong success, and have the ability to thrive in the future. If you appreciated this information, do one thing. Don't do anything else, just one thing. Hit that subscribe button, and I'll see you tomorrow. Take care.